bares its claws, ready to climb over anything that gets in its way. The animal, the animal. Can anyone stop? Bum 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 bum. The animal. The animal. My goodness. New from Galoob. Yeah, I never wanted one of those. I just really liked the commercial back in the day. All right. So, today is insurance. 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 So there are two concepts, right? There's financial offense and financial defense. Financial offense is going to be earning or investing, kind of your rate of return on investing. And financial defense is going to be your saving and your, not losing of money, however you want to say it, whether that is getting something necessary cheap or not getting that thing at all. And people accomplish these in different ways. But one very important part of defense is insurance. The most exciting topic I will ever talk about. So that's why I'm keeping it brief. This is important. It's really important. In the hierarchy of save $1,000, pay off your consumer debt, save 3 to 6 months of emergency expenses, insurance is all before that. There are certain types of insurance that you must have immediately, especially if you're in certain situations. Number one is health insurance. Everyone needs it. Health events are a number one reason for bankruptcy. So you need good health insurance. That means that it covers kind of all of the really major, huge, horrible events that could happen to you. In other words, if the insurance only covers like $200,000 as its cap, then that's no good, because there are many horrible things like breaking your back that will easily cost $1 million. So we need quality health insurance, and you need it now. You need it yesterday. It is an assumed line item on the budget. The only things that are more important would be food, shelter, clothing, heat, and transportation. I mean, it depends on what kind of job if you need the job to have the insurance, then okay. But health insurance is really, really high on the list. Probably number one. Number two is life insurance. Life insurance pays out when you die. So it's kind of like death insurance, but that's not a fun name, so it's called life insurance. There are generally two kinds that are sold. There is term, which covers you for a certain term, such as 20 years or 30 years, and then it no longer covers you. And then there is something called cash value or whole life insurance. We want to buy term insurance because it is much cheaper, and we want to buy a level that is 10 to 12 times your income. So if you're making $60,000 a year, then you would be buying $600,000 to $900,000. Who should buy life insurance? The people who need to buy life insurance are the people who have dependents. So if you have a wife, if you have kids, if you have someone where you are, your financial plan is meant to cover and pay for things for them over time, you need to buy life insurance so that your plan isn't derailed when you accidentally die. And you should buy the term insurance because it's cheaper, 10 to 12 times your income. Do not buy cash value life insurance or whole life insurance. They basically lock away your money at a horrible rate of return for very little coverage. And they have complex contracts. The salesman, the insurance can't pronounce that word. They get a nice premium if they manage to sell you this. They get a nice kickback. You don't want it. You want term life insurance, and if you have kids or a wife, you need to go and get that today. Disability insurance. California has some. Many more people become disabled than think they will. I think it's something like 25% of people are disabled by age 65 or 60 or something like that. Anyway, if you can get it cheaply, a lot of times that's through your employer, then it's usually a good buy. Next one is home insurance. Most mortgage companies are going to require this as a condition of having a mortgage. If your home burns down, you will need money to replace things in your life. So you should definitely have home insurance. If you are renting, you should definitely have renter's insurance because it is really cheap. It's like, $20 a month or something. And again, in case of something like a fire, it's going to replace everything that you need. Car insurance. This is usually legally required. The best way to save money on it is to drive a cheap car that would be cheap to replace and save up money on the side so that you don't have to bother with collision. If you get to maybe step 3 and you have, 3 to 6 months of expenses in the bank, you can usually afford to buy a cheap car out of that. You can also, in addition to not paying for collision, you can raise your deductible to $1,000. And if you do that, you will need $1,000 sitting on the sidelines ready to pay for anything related to your transportation going wrong. If you have a lot of accidents, it might be worth it to go with a $500 deductible instead of $1,000. You basically need to figure out what the premium is for a $500 deductible, figure out what the premium is for a $1,000 deductible, subtract them. That's the difference in premium. Multiply that times 12. That's going to be the annual difference in premium. And then you need to see if the annual difference in premium is like about what you might spend on car-related stuff over a year anyway. And so that's how you want to think about car insurance. I go with the cheap car, no collision, $1,000 deductible method. That's how I roll. I guess something to keep in mind is that if you are renting a car and your car insurance does not include collision, you might want to buy the extra policy on the rental. I did rent a car one time and somebody scraped the whole side of the car as I was parked in getting gas at a gas station. Just a stupid driver. But I had the kind of add-on policy, and so I didn't have to deal with any bullshit. But that's the only time on rental cars that anything has ever been damaged on the car. There are a bunch of types of insurance to avoid. Accidental death insurance, because life insurance already covers that. Specific health insurances, such as cancer insurance, that should already be covered by your health insurance, so that's not necessary. There are some policies they sell themselves as like mortgage insurance, where if you lose your job, they'll pay your mortgage or something like that, or they'll pay off your mortgage in case of your death. In those cases, you don't want it. Your life insurance should be enough to cover paying off the mortgage in case of your death. And this isn't exactly insurance, but extended warranties. Extended warranties are typically not a good deal. You overpay for what you get. A very, very small fraction of the extended warranty cost is used to pay for the actual probability that your item will break. So avoid extended warranties that they try to push at stores. So rewinding, for most of you, I would say that if you don't already have it, health insurance, number one, get worried about it. It's very, very important. And for people who are married or have kids, term life insurance, go out and look at it today, add it to your calendar to look at it tomorrow. Make sure your family is covered. Make sure your family is protected, because when that stuff is not in place and disaster strikes, which it does, it makes the situation a lot more challenging financially. And I already know a good number of people my age who have suffered early deaths from things that no one could have predicted and they could not have avoided. So take care of the people you love. And that's it for the insurance talk. All right, have a great day. Fun topic.